Welcome back, everyone. Today we'll be talking about why I bought gold for my 2025 portfolio, what kind of a role gold plays in your portfolio, as well as why I picked the ICICI Prudential Gold ETF, and finally, what the future of gold looks like. So, these were the five key reasons why I added gold to my 2025 portfolio. So, let's go into a brief overview for each one of these. So the first one is that a lot of governments this year were running fiscal deficits, and the US in particular is running an extremely large fiscal deficit with their debt to GDP ratio now reaching 125%. And so the only solution to this is to either print more money, which will cause inflation, or take on more debt, which can hurt their currency. And that's exactly what happened this year. The second reason is persistent multi region geopolitical conflict. And we saw at the starting of this year the Russia Ukraine conflict, the Israel Palestine and Iran Israel tensions. And then over the course of the whole year, there were a lot more conflicts. And since gold is a safe haven asset, it eventually led to a lot of people moving into gold and the price of gold going up. And finally, um, global interest rates were at their peak during 2024 and they gradually declined in 2025 as was expected. And decrease in interest rates actually means that people take the money out of the country, also leading to devaluation of certain currencies, like the Indian rupee was devalued as well as the US dollar. And this also impacted the movement of gold. So basically, as a lot of countries in Asia, particularly, diversified out of the dollar. They sold the US dollar and started buying gold through their central banks. The gross purchase for gold skyrocketed and the gross sales for gold dried up, and the US dollar index actually went down. So the performance this year of gold was it went up 77.8%, which is very impressive because all of these factors have basically contributed to this. And I started with just a 4% allocation here to gold, but because it um, increased so much, it's now become 7% of my portfolio, even though a lot of the stocks I bought have gone up in value. So, yeah, these are the reasons that gold went up. And I wanted to actually look into what role does gold actually play in your portfolio over time. So this was a study done by the SPDR Gold Strategy team from 2005 to 2019, wherein they created four portfolios, exactly the same. They took assets from the whole world. So you can see here World Daily TR Index and World Inflation Linked Bond TR Index. So they took equity as well as fixed income products. And the only difference you see here is the allocation to gold. So portfolio B has 2% allocation, C has 5, and D has 10%. And what they found was that portfolio D had the highest Sharpe ratio and the highest cumulative return, and at the same time, it had the lowest drawdown. So they kind of concluded that gold is able to provide the maximum returns and the um, lowest drawdown, basically, if you give it a certain allocation in your portfolio. And here, 10% seems to be the optimum in this case. Finally, let's discuss some of the gold investment options in India and why I chose the gold ETF. So, if you talk about SGB, which are sovereign gold bonds, they're extremely safe and they're very good, but for a long term time period because you're able to get tax saving on them, but only if you buy them for and keep them for 8 years. That's how you avail the maximum tax benefit. Gold mutual funds are also good, but basically you might have to pay a higher price for them compared to gold ETFs, which just track the price of gold. Digital gold, I would stay clear from because it's unregulated and it's not under SEBI's purview. And physical gold is usually it's good to buy, but there might be transportation costs or if it's jewelry making charges and then the cost to store it. That way, a gold ETF is a simple way to track gold and it's not very expensive, and most of the ETFs move very similar to each other because they all track the price of the same thing. And so now let's discuss why I chose the ICICI Prudential Gold ETF in particular. Let me just pull up my screener. So now, when you're selecting gold ETF, there's actually just two things that I like to look at. The first one is the average volume. It should have a decent amount of volume so that you can just buy and sell the ETF when you want, so you have high liquidity. And the second thing is the expense ratio. And here we can see that this particular ETF has a very low expense ratio and it has a decent amount of volume. So that's why I picked it. And finally, let's discuss what the future of gold looks like. So JP Morgan says that looking ahead, prices are expected to push towards $5,000 and the possibility of $6,000 because of tariff uncertainty and strong demand from ETFs and central banks, which we discussed. And the demand for gold is set to remain strong. So if you guys learned something and you like this video, you can comment down below and share it with your friends. And thank you.